My name is Alina Islam, and I'm a Senior Research Associate here at Red Cloud Securities. Next, we are pleased to host Grounded Lithium Corp. and have with us Gregg Smith, President and CEO of the company. We would like to thank the PMX Group for sponsoring this session. Gregg, you will have 15 minutes for your presentation, followed by a 5-minute Q&A session. Attendees, please feel free to ask your questions using the Q&A link, and we'll get to as many as we can. With that, Gregg, I'll turn it over to you to start the presentation.
Great. Thank you very much, Alina. Grounded Lithium is a relatively new entrant into the lithium market. We're also proud to be part of the evolving Canadian prairie landscape, which has seen the benefits from agriculture, energy production, potash mining, and now lithium. So it continues to progress. Globally, there's a demand for energy transition. It seems to be here, real, and we're committed to being a part of that evolution. We offer this typical language just to make investors aware of there are risks associated with the potential upside that comes with investing. Our understanding of the play for lithium from brines evolved from us looking at our regional understanding, and our eventual position in the play grew out of that. We looked at how are the brines being sourced, where are they being kept or trapped within the subsurface, and that led us to where we decided to focus. So our mantra was, we follow the geology. And we ended up in Saskatchewan. Our lands are in Saskatchewan, where we do have extensive experience within the team. So we are in with the Leduc-Duperow sequence, which is where everybody else seems to be playing within the Devonian and the southern parts of Alberta and Saskatchewan. It's the Leduc in Alberta, and it's the Duperow in Saskatchewan. We currently have more than 70 sections or square miles of land, and we have plans to continue to grow that. We intend to grow that more than threefold from where we are today, and we have a business plan to do that and commence our drilling operations as well to delineate the resource within the land position that we own. Within the area, we have solid evidence for high lithium concentrations as well as good deliverability from the reservoir. The area that we're in is accustomed to resource development and it living in harmony with the agriculture that's there. So within the area, we have excellent roadways, highways, rail lines, and access to all the utilities we might need in terms of electricity, natural gas, and skilled labor. With our very focused team of professionals, we're looking at this as a compelling entry point, and we've been investing all along into this entry point as well. This is our team, our core team of experienced and pragmatic resource professionals. We've added to this team as we needed more skill sets along the way. And as we identify more skill sets needed in the future, this team will continue to grow. Gregg and I were the first two team members, and that evolved because we have a strong vision and values alignment. And specifically, we recognize that we're a long ways from being commercial. It'll take years. So we must be very prudent and manage our capital in a very pragmatic way. It must be meeting the goals of acquire, delineate, and commercialize. And as such, we have very strict controls in place to manage that. The team itself understands all of that, and that will be our mantra as we move forward. As our staff moved forward on executing our business plan, we recently announced an oversubscribed financing with ultimate funds totaling 5.7 million and an additional corporate step to take Grounded Lithium public through an amalgamation with VAR Resources. and that'll likely happen or conclude within the second quarter of this year. This will progress all of our GLC shares to liquidity and free trading, done through stages to allow the stock to build momentum. Management and insiders of GLC will be subject to a full TSXV escrow for 3 years, and we're okay with that. We're in this for the long term, and we will continue to invest every step along the way. At this point, after the amalgamation, you'll see us at roughly just shy of 57 million outstanding shares. The development of GLC has had an interesting alignment with the dynamic price for lithium salts. The price for lithium carbonate in the active Asian market was over $20,000 US a ton before COVID caused a slide in the price, then slid down to about 10,000 US dollars a ton. And that's about the time that we were looking to try to understand this space. At the time that GLC incorporated and we started putting dollars into our business, the price had dropped further to $6,750 US a ton. We didn't expect that to last. As we started to do more initial funding into the company and acquire lands, the price had risen to a little over $10,000 US a ton. And we just recently did this raise in partnership with Red Cloud. And as we went through that raise, the price dramatically rose to now over 60,000 US a ton. Again, we've invested at every step along the way, and we'll continue to do so. The lithium market. Within the lithium market, there's no avoiding the need for lithium into the energy transition. It's the lightest metal possible, and it also carries a high charge capacity. So lightness is obviously important for an electric vehicle, and it's very important. And what we see happening now is you're seeing the battery size is growing because people want longer range and capacity to drive their vehicles on an electric charge. The governments are pushing this transition while consumers and auto manufacturers are embracing the change. Production and demand for EVs continues to rise every year. And we expect to see the EV sales north of 6 million units in 2022. At this point in time, most batteries are manufactured in Asia, China, Japan, Korea. The battery manufacturing market within North America is in its infancy. It's just getting going with plants being established in California, Nevada, and Ohio. But that will continue to grow as well, as there are a lot more plants in the plans for the next 5 years that we can see. All of this should keep the demand and need for lithium high in the very near future. Our understanding, our analysis began at the regional level, looking for those mechanisms there. Where's the lithium brines coming from? How's it getting trapped? And from that took us to the prospect levels. We have multiple criteria for when we're mapping and meeting our criteria for what we want to be acquiring. We want to only be acquiring top quality resource within our inventory. So we are very selective using our multiple criteria. The geology of the Leduc-Duperos formation here is thick, interbedded dolomites and limestones, and it's over 250 meters thick. And as I said before, we're targeting the best reservoir we can find because that's where it's going to give us both the storage capacity for the brines as well as good deliverability. Our building blocks for growth are the sections or the square miles that we acquire. And across our area, we take all of the modern log suites and we do complex petrophysical analysis to give us the best understanding of the reservoir itself and its thickness. The petrophysical analysis to do the porosity calculations actually compensates for the various lithologies that we're in. We can then take that population of wells and do a distribution of what is the porosity and thickness of the reservoir to come up with how much volume of brine can we hold within a section. And when we do the statistical analysis on that, we come up with a distribution. So when we look at the reservoir itself, the range for P10, P90 is between 165 and 295 million barrels within a square mile or a section of land. The most likely outcome is around 14,500 barrels. When we take the observed lithium concentrations in our area and average it at 75 milligrams per liter, that puts us into a range of between 10,500 and 18,500 tons of lithium carbonate equivalent within a section, with the most likely outcome of around 14,500. So we have lots of reservoir to work with, and we have about 70 sections currently. We plan to continue to grow that and also do delineation drilling this year on our lands so that we continue to prove up the resource to the investors and our resource auditors. This slide highlights 2 wells within the area that have been measured for lithium, and they also have productive capacity. So well B, it came on at 4,500 barrels per day and runs flat at 2,500 barrels per day. These are producing brine for an industrial purpose, and they are fit for purpose. This is all they need to produce out of them. Well A, it came on at 2,500 and produces flat at 1,000 barrels per day. As resource professionals, we look at these wells and say, they're capable of so much more. We change the drilling, completion, and pumping technology, and these wells will produce dramatically higher brine than they are currently doing today. The only reasonable method for extracting lithium from brines is going to be DLE, or direct lithium extraction. Not only are these large evapo-concentration ponds impractical within Canada, Saskatchewan, because of our weather, I doubt that there is any regulatory body that would allow us to start to create these massive evapo-concentration ponds within Canada. So it's a, who's doing it? Well, there's over 70 companies right now in the space that are developing the better mousetrap, the best way to produce lithium from the brines. Having said that, the base process was invented in the 1970s, over 50 years ago. So it's been around a long time, and the challenge is the commercialization and cost effectiveness of that. We're taking the attitude that we will stand on the shoulders of these highly intelligent technology partners, and we can step back and look at all of them and decide who has the best technology for our brines that will maximize our production and minimize our costs. And in the end, we'll form a partnership or a joint venture or some kind of commercial arrangement with whoever can do the best job for us. First and foremost, we are a lithium player, resource company. We want to provide value to the shareholder. So we mean current shareholders and all eventual shareholders. Our view is that all shareholders need to win, and that's our plan to move this forward. We see intrinsic value in the company based on our forward models, and at every capital raise, there'll be value for every shareholder along the way. We're investors, we'll continue to be investors, and we look forward to moving this forward to commercialization. So I'd like to thank you for your time today and look forward to answering any questions.
All right, thank you for a great presentation, Greg. I have one question here. So during your presentation, you mentioned you're going public next quarter. So once you're public, I guess, can you quickly highlight what sort of news flow investors can expect, let's say, over the next 6 to 12 months?
Um, Well, our plan is we will be having news releases on changes in our land position and changes into the evaluation of our resource. Because we will be drilling wells and doing wellbore reentries where possible. So you'll expect to see a flow of information in terms of land and actual results.